What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had a relatively flat day in the stock market. That's completely normal after those big moves we've seen the last couple of days. So after this consolidation, will we go higher or lower? First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Okay, just a quick reminder that my trade alert service, BANC Trade Alerts, is now live and I did make a video on exactly how it works. You can catch the video that I'll link above on exactly how the BANC system works, so you know exactly how the trade alerts could help you in your trading. I'm also running a 50% off promo for your first month if you do use the coupon code BANC at signup. So check out the links below in the description of this video for all of the information you need to check out BANC and sign up. Alright, so jumping over to SPY, I do want to make one thing known with SPY is that we did pay out a dividend a few days ago and that is affecting the technical analysis. You can see on SPY we're not even close to retesting the all-time highs, but if I switch over to the SPX, you can see that we did retest those previous all-time highs and we are finding resistance at that level. So we're still doing analysis on SPY, but just understand on the SPX things are looking a lot more bullish and we do have a full bull trend in the SPX. So in this case, the index is a lot better to take a look at because it doesn't have that dividend and the price is not reflecting that dividend payout. So anyway, jumping back over to SPY, you can definitely see things are starting to look very bullish. Like I showed on SPX, we have the full bull trend back and we're coming off of a critical support of the 50 EMA. So that bounce is very strong and very impulsive. And now we're just cooling off because that was a very strong move and nothing goes up in a straight line forever. So it's completely normal to see a little bit of a pullback or cool off here, but do know that the markets are definitely looking bullish from this position. We have critical support on SPY at the 20 simple moving average at 421. And cracking below 420 would be a warning sign that we could be rolling over. So right now, set your critical support at 420 and a break below 417 would be the final warning that we could be going much lower. If we break below 417 again, it's very unlikely the 50 EMA is going to hold that as support the second time around. So watch the gap close at 411 and the gap close at 400 below that. Your critical upside resistance is still 423 and 425. And if we do break out to new all-time highs, we're very likely going to SPY levels of 427 and 430. So don't look too far ahead because we still need to break above 425, but it's looking more and more likely that the bulls are going to make an attempt to push through that resistance level. So while we could be cooling down, look for critical support at the 421 support level and look for a possible bounce and attempt to break out of 425. On the NASDAQ 100 triple Qs, we're relatively flat on the day, and intraday we were making brand new all-time highs. We can see we're still trading above 346 and the next price target is up here right around 353. We still do have resistance in this area, so we still do need to break above about 348, but the triple Qs are looking very bullish as you can tell from the trend. All of these moving averages are in full trend mode and the price action is still above the 5 EMA. So watch possible support at 346 and 342 with our critical level still down here at 339. 342 is becoming more critical each and every day, so that will be a critical support level. Below the 20 simple moving average at 339, we would be a lot more defensive and we could come back down and retest the 50 EMA right around 334.5. So overall, the triple Qs are still looking very strong, which should be no surprise because that quad witching is over. And I did mention many times that the tech sector was getting a lot of that money. We see confirmation that the tech sector is still looking very strong and it does look like it's ready to continue to go higher. On the Dow Jones, we're still on that dead cat bounce and we're still finding resistance at the 50 EMA. Remember, the critical resistance we need to break above is 340 and we failed to break above that level yet again today. So continue to watch 340 and above that we'll still have resistance at 341.7 and 343. The Dow Jones is not bullish until it gets back over the 50 EMA and even then we need to get a few closes above that level to start building back up a bullish trend. So be cautious of these dead cat bounce looks and do know that support is down here at 336.7. Below this support, we would probably fill the gap below at 331.6. On the Russell 2000, we were up 0.33% today and we're back above all the moving averages. We just need these moving averages to go back into a full bull trend and help push the Russell 2000 to brand new all-time highs. Critical resistance is 230 and 233, and above 233, we could be breaking out to 237, which would be our all-time high price target. Critical downside support is right around 228 and 227, and below that, we would retest the 50 EMA at 225. Right now, if you're bullish on the Russell 2000, you want to see it staying above 228. The longer the Russell is above 228, the more likely it's going into a bull trend. So watch that support level very closely. On the Arkk ETF, we continue to see bullish breakouts, and today Arkk went up over 2%, and it did break out of that resistance trend line at 122. This is a very bullish price action breakthrough, and it does look like we're well on our way to getting to the next price target just above 127. Our downside support levels are now 122, 120, and our 50 EMA at 116. Arkk is looking very strong, but do note the 20 simple moving average still needs to cross back over that 50 EMA to get the full bull trend. Right now, the price action is everything we need to know, and the price action continues to break through resistance, so we do know that Arkk is looking very bullish. On the VIX, which is our fear indicator, we dropped over 2% today, and we see the VIX back below that critical support at 16.6. Remember, the lower the VIX goes, the more likely we're going to all-time highs, and we continue to see the VIX going lower after that spike in quad witching. So overall, the VIX is telling us to be bullish, but continue to watch that critical resistance above at 18.2. Remember, below 18.2 we're bullish, and above 20 we're cautious, and right now the VIX is telling us to be bullish. On the dollar, we're cooling off a little bit after that parabolic move, and we are starting to see the dollar finding support at that 5 EMA. Will the dollar try to push up for another leg higher, or will it break down and go lower from here? This is very important to pay attention to if you're trading gold and silver, and any signs of strength in the dollar would be weakness for gold and silver. On gold, we're still holding up above that support level at 1776, and if that does break down, we're coming back down to 1761. Remember, below 1761, we're going back into the 1680s, and our price target is above at 1829. On silver, we're still holding that support level at 25.78, and below that, we would have support at 25.1. Our price target above is 26.5, and our 50 EMA at 26.8. On Bitcoin, we're currently up about 2.5%, and we did see Bitcoin find resistance at that $34,700 level. We need to see Bitcoin getting back over this 20 simple moving average at $36,000 to start looking like it could be a bullish bounce. Remember, this is still a double bottom look as long as we're above $30,000. Our critical resistance will be 39,000 and the 50 EMA just above 40,000, and we will see Bitcoin starting to look a lot more bullish if we can break back over that 50 EMA. But as long as Bitcoin is below the 50 EMA, we want to be cautious because Bitcoin's still in a bear market. We don't want to get bullish on something that's in a bear market, but we do want to watch these critical support levels very closely because these could be great buying opportunities. Remember, we got to that support level yesterday and saw a huge wave of buying, and a huge wave of buyers showing up is always a bullish indication. So the price action at that support level was very bullish, but we're still in a bear market, so we still need to be cautious. So watch those critical resistance levels, and the critical support will be $30,000 and $27,000. On Amazon, we were flat for the day, which is completely to be expected after this monster bullish rally. Remember that we have support right here at 3,500, and we did see that level acting as support today. We're closing just above support with the next price target at 3,552. If 3,500 support breaks down, look for the next support level at 3,460, and below that we're looking for 3,400. On Tesla stock, we finally got that bullish breakout today with Tesla going up over 5% and blasting through both of our resistance levels. We got through 626 on a gap up, and then we saw buyers coming in and blasting right through that 50 EMA. So Tesla is definitely looking a lot more bullish now, and we did see this spike on increasing volume. So right now, the critical support on Tesla will be 633, and we want to see Tesla staying above 633. The longer Tesla can stay above this support level, the more bullish it will become. Our price targets on Tesla were 660 and 680, but we need to stay above this critical support to validate those targets. Our critical downside support, if we do break down, will be 626 and our 20 simple moving average at 614. On Apple stock, we were relatively flat today, going down 0.21%. And we're continuing to see Apple building up a bullish trend. You could see that 20 simple moving average is getting very close to crossing back over the 50 EMA, and then that means Apple will have the full bull trend. So right now, if you're bullish on Apple, you want to see it remaining above 132, which was the breakout level, and we definitely don't want to see Apple breaking back down below 129. So those are your critical support levels, and the 50 EMA is now down here at 128. So we see all of these moving averages turning positive and starting to trend, which does mean that Apple is very likely going into a bull market. So watch the upside price target at 135. On the financial sector, we were up 0.19% today, and we still see the financial sector trading below the 50 EMA. Remember, this is a dead cat bounce until proven otherwise, so watch the breakthrough at that 50 EMA. We want to see if that level is going to be resistance, or if the bulls can break above it and possibly get the financial sector back into a bull trend. On the industrial sector, we see another bearish look on the price action, getting rejected at the 50 EMA and closing below the 5 EMA. This is not a good look, and this does still look like a dead cat bounce until we could get back over that 50 EMA. On the healthcare sector, we were down 0.42% today, and we did close below the 5 EMA, but we still have the bullish trend. It does look like the healthcare sector is consolidating and getting ready for another move, and with a bullish trend, we do want to give benefit to the bulls to push the healthcare sector higher. On the energy sector, we were up 0.28% today, and we continue to see the energy sector closing above all the moving averages. The energy sector is very close to getting back into a full bull trend, and it's going to try to break out and possibly form a brand new all-time high. So jumping back over to the S&P 500, we still see a lot of strength in the tech sector and the healthcare sector. Energy is also looking very well, but we still see a weak financial and industrial sector. Remember, we want to see all of the sectors going bullish together, and that could mean that we're going to have a very nice bullish rally in the summer. So watch those financials and watch those industrials, because if they can get back over the 50 EMA, that's going to be a very bullish indication. Even while they're weak, if we continue to see strength in the tech sector, the S&P 500 is still very likely going to continue to go higher. Remember, the S&P 500 is over 30% tech, so the tech sector is definitely where all the eyes are going to be right now, and we need that tech sector to hold up that strength while the financials and the industrials are weak. So watch those critical support levels very closely, because if we see the price action breaking through them, we will know that the market is weakening. But right now the market is strong and bullish, so we want to remain a bull in a bull market. Also remember that my trade alert service, Bank Trade Alerts, is now live, and it only trades the TQQQs. You get all of your buy and sell alerts via email and text message, and it has very good results. Check out all of the links in the description below so you can learn more about the bank system. Don't forget, there's also a 50% off promo, so right now is the best time to join. Also, there's the Stocks Channel Discord where I do intraday updates and analysis to always help you navigate this market. There's plenty of trade ideas on the Discord to help you crush this market as well. You can find out how to join the Discord in the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.